Imagine this, you want to grow your money, but you're stuck wondering, should you invest in stocks, bonds, or both? Let's break it down in simple terms. Investing can feel overwhelming, especially when you're choosing between stocks and bonds. These are two of the most common ways people grow their wealth, but they work very differently. Knowing which is right for you could make a big difference in your financial future. Let's look at how they work and how to decide what fits your goals. Let's start with stocks. When you buy a stock, you're buying a piece of a company. Think of companies like Apple or Starbucks. If they do well, their stock price usually goes up, and you can sell your shares for a profit. Some companies even pay dividends, which are like small bonuses for being a shareholder. But stocks can be risky. If the company struggles, your investment might lose value. Now, bonds work differently. Instead of buying part of a company, you're lending money to it or to the government. In return, they promise to pay you back with interest. Bonds are typically safer than stocks, but they usually offer smaller returns. For example, U.S. Treasury bonds are one of the safest investments, backed by the government. They're great for people who want steady, reliable income without much risk. Here's a simple scenario. Let's say you have $10,000 to invest. If you put it all in stocks, you might see it grow to $15,000 in a few years, or drop to $8,000 if the market dips. With bonds, your $10,000 might grow to $11,000, but it's less likely to lose value along the way. So, how do you choose? If you're younger and have time to ride out market ups and downs, stocks might be a better fit. They offer higher growth potential over the long term. But if you're nearing retirement or just want something more predictable, bonds could provide the stability you're looking for. In the end, there's no one-size-fits-all answer. Many people use a mix of stocks and bonds to balance risk and growth. The key is to think about your goals, how much risk you're comfortable with, and how long you plan to invest. If this video helped simplify things, give it a thumbs up, and don't forget to subscribe for more tips like this. Have questions or a topic you'd like us to cover? Drop it in the comments.